Question 1. Topic: Risk assessment and management. Which of the following best describes the primary purpose of underwriting in the context of risk management in the insurance industry? A. To minimize the potential for claims by issuing policies only to low-risk individuals. B. To assess the potential financial impact of claims and determine appropriate policy premiums. C. To prevent all risky policies from being issued to avoid any potential losses. D. To issue policies to as many individuals as possible, regardless of their risk level. Answer: B. To assess the potential financial impact of claims and determine appropriate policy premiums. Explanation: Underwriting plays a crucial role in the insurance industry by evaluating the risks associated with an applicant and determining the premiums that would adequately cover potential claims. Underwriters do not aim to avoid issuing policies to high-risk applicants, but instead assess the risk and charge a premium that reflects the likelihood of a claim. Option A is incorrect because minimizing claims by only issuing policies to low-risk individuals would reduce market reach, while option C is not correct as underwriting is not about completely avoiding risks but managing them. Option D is not the best approach since underwriting involves careful risk evaluation, not issuing policies indiscriminately. Question 2. Topic: Underwriting principles and practices. Scenario question: Mr. Garcia is a property underwriter at a New York-based insurance company. He has received an application for homeowners insurance from a client who lives in an area prone to severe flooding. The applicant has a history of flood-related claims and the property is located within a 100-year flood zone. What should Mr. Garcia do in this situation? A. Approve the application as long as the applicant pays a higher premium. B. Reject the application because of the flood zone and the applicant's claims history. C. Approve the application with rider excluding flood-related claims. D. Approve the application but suggest the applicant purchase flood insurance separately. Answer: C. Approve the application with a rider excluding flood-related claims. Explanation: Mr. Garcia must assess the risk based on both the applicant's claims history and the location of the property within flood zone. Since the property is in 100-year flood zone and the applicant has history of flood-related claims, the insurer may still approve the application, but it can include exclusions or special conditions to mitigate the risk, such as that excludes coverage for flood damage. Option is incorrect because approval alone without addressing the risk appropriately, G, through exclusions or adjustments, could lead to significant losses. Option B is also incorrect because rejecting the application solely on flood-related risks may not be the best approach. Option D is incorrect because offering separate flood insurance is a viable option, but the primary underwriting decision is about managing the risk within the homeowner's policy itself, rather than simply suggesting separate policy. Question 3. Topic: New York State insurance laws and regulations. Which of the following is the most important factor in determining whether an insurance policy complies with New York State's regulatory requirements regarding underwriting and claims handling? A. The financial stability of the insurance company. B. The personal preferences of the underwriter regarding risk classification. C. Adherence to New York's statutory requirements and consumer protection laws. D. The market competition and pricing of the insurance product. Answer: C. Adherence to New York's statutory requirements and consumer protection laws. Explanation: In New York State, insurance policies must comply with the regulations set forth by the Department of Financial Services, DFS, and other relevant consumer protection laws. These regulations govern underwriting practices, claims handling, premium rates, and other aspects of the insurance contract to ensure fairness and transparency for consumers. Option is important for an insurance company's solvency but not directly related to regulatory compliance in underwriting. Option B is incorrect because underwriters must adhere to statutory rules, not personal preferences, in classifying risks. Option D focuses on market competition, but regulatory compliance always takes precedence over pricing strategies, ensuring consumer protection. Question 4. Topic: Underwriting process. Which of the following factors is the primary consideration when underwriters assess the financial stability of an applicant during the underwriting process for life insurance? A. The applicant's family history of medical conditions. B. The applicant's credit score and financial statements. C. The applicant's occupation and job hazards. D. The applicant's previous insurance claims history. Answer: B. The applicant's credit score and financial statements. Explanation. When underwriting life insurance, financial stability is a key factor in determining the applicant's ability to maintain the policy and pay premiums. The underwriter will assess the applicant's credit score and financial statements to gauge their financial health and ability to handle long-term obligations. Option is more relevant to health-related underwriting. Option C pertains to occupational hazards, and Option D addresses claims history, which is less relevant to life insurance financial stability and financial documents. Question 5. Topic: Types of insurance, property and casualty. In the context of property and casualty insurance underwriting, which of the following best describes the role of loss history in the risk assessment process? A. Loss history is only relevant for commercial insurance, not homeowners insurance. B. A history of claims indicates that the applicant is high risk, which may result in higher premiums or denial of coverage. C. Loss history has no impact on underwriting decisions if the applicant is financially stable. D. Loss history is only considered when the policyholder is involved in a natural disaster. Answer. B. A history of claims indicates that the applicant is high risk, which may result in higher premiums or denial of coverage. Explanation. Loss history is a critical factor in property and casualty underwriting as it provides insight into the risk an applicant poses. A history of frequent or severe claims suggests that the applicant may continue to make claims, thus increasing the insurer's risk. Based on this, underwriters may either premiums or refuse coverage altogether. Option is incorrect as loss history impacts both commercial and homeowners insurance. Option C is inaccurate because loss history affects underwriting decisions regardless of the applicant's financial stability. Option D is also incorrect since claims history can affect underwriting decisions outside of natural disaster events. Question 6. Topic: Risk selection and classification. When classifying an applicant for auto insurance, which of the following factors would most significantly influence the underwriter's decision on the applicant's risk category? A. The applicant's age and driving record. B. The applicant's income level and credit score. C. The applicant's choice of vehicle and location of residence. D. The applicant's previous insurance coverage from another company. Answer A. The applicant's age and driving record. Explanation. For auto insurance underwriting, the applicant's driving history and age are key risk factors. Younger drivers and those with poor driving records are considered higher risk due to the likelihood of future accidents. Option B is relevant but does not carry as much weight as driving behavior in auto insurance. Option C pertains to vehicle and location but is secondary to the applicant's history of safe driving. Option D may provide some information but is not as crucial in risk classification as the applicant's direct driving record. Question 7. Topic: Risk assessment and management. Which of the following is the most effective strategy an underwriter might use to manage catastrophic risks in a homeowner's insurance policy? A. Increase premiums across the board for all policyholders. B. Implement exclusions for specific high-risk natural disasters like floods or earthquakes. C. Offer higher coverage limits to attract more customers. D. Ignore historical data and trends to keep the process simple. Answer. B. Implement exclusions for specific high-risk natural disasters like floods or earthquakes. Explanation. Catastrophic risk management involves taking steps to limit exposure to severe, low-frequency events like floods or earthquakes. Implementing exclusions for these high-risk events helps underwriters avoid large losses. Option A might result in uncompetitive premiums, and Option C would increase exposure to high risks without mitigating them. Option D is incorrect because ignoring data would increase risk and is not a sound underwriting strategy. Question 8. Topic: Emerging trends and technologies. How has the use of artificial intelligence (AI) impacted underwriting practices in the insurance industry? AI has replaced underwriters, making human involvement unnecessary. B. AI can analyze vast amounts of data to assist underwriters in making more informed and accurate decisions. C. AI algorithms have been found to be less reliable than traditional underwriting methods. D. AI is only used for claims processing, not underwriting. Answer. B. AI can analyze vast amounts of data to assist underwriters in making more informed and accurate decisions. Explanation. Artificial intelligence (AI) in underwriting allows insurers to process and analyze large amounts of data quickly, improving risk assessment and decision-making accuracy. It helps underwriters better predict risk factors and set appropriate premiums. Option is incorrect as AI assists rather than replaces underwriters. Option C is incorrect because AI, when properly implemented, enhances the accuracy of decisions. Option D is also wrong because AI is increasingly being used in underwriting, not just claims processing. Question 9. Topic: Ethical and legal responsibilities of underwriters. An underwriter discovers that a colleague has intentionally ignored an applicant's material misrepresentation in order to approve policy. What should the underwriter do according to ethical standards and legal responsibilities? A. Ignore the situation as it is not their responsibility. B. Report the issue to management or regulatory authorities to ensure proper action is taken. C. Confront the colleague privately and let them handle it. D. Approve the policy themselves to avoid conflict with their colleague. Answer: B. Report the issue to management or regulatory authorities to ensure proper action is taken. Explanation: Underwriters have an ethical and legal obligation to act with integrity, transparency, and fairness. If an underwriter discovers that a colleague has made a material misrepresentation, it is their responsibility to report the issue to management or regulatory authorities. Option is incorrect as ignoring unethical behavior undermines the integrity of the underwriting process. Option C is not enough to address the severity of the issue. Option D is unethical and could lead to legal ramifications for both parties. Question 10. Topic: Underwriting for high net worth individuals. What is the key difference between underwriting for high net worth individuals (HNYs) and standard individual insurance policies? A. HSYs typically require higher coverage limits due to more expensive assets and complex risk exposures. B. HSYs are generally considered lower risk due to their higher income levels. C. Underwriting for HNYs involves fewer exclusions and more comprehensive coverage options. D. HSYs must pay lower premiums because they have more assets to cover potential claims. Answer A. HNYs typically require higher coverage limits due to more expensive assets and complex risk exposures. Explanation: High net worth individuals often have more assets and more complex risks, including multiple properties, valuable collectibles, and higher liability exposures. Underwriting for HNYs focuses on providing coverage that matches these unique needs, such as higher policy limits and specialized coverage options. Option B is incorrect because HNYs are not necessarily low risk, but their risks are simply different and more complex. Option C is partially correct, but the key focus is on coverage limits, not exclusions. Option D is incorrect because HNYs typically pay higher premiums to cover the higher value of their assets and increased risks. Question 11. Topic: Insurance contracts and policy provisions. Which of the following clauses in an insurance policy determines the insurer's responsibility in the event of partial loss? A. The insuring agreement. B. The condition clause. C. The pro rata clause. D. The partial loss clause. Answer: C. The pro rata clause. Explanation: The pro rata clause stipulates how the insurer will pay for a partial loss, particularly when multiple insurers are involved. It allocates payment proportionally based on the coverage limits. Option A. The insuring agreement outlines the insurer's overall obligation to provide coverage, but it does not specifically address partial loss. Option B. The condition clause includes terms that govern policy conditions but does not specifically address loss payments. Option D is incorrect as the partial loss clause is not a standard policy provision. Question 12. Topic: Risk assessment and management. In property and casualty underwriting, how does an underwriter assess the risk associated with an applicant's home located in flood-prone area? A. The underwriter assesses the applicant's previous claims history. B. The underwriter considers the location and elevation of the property relative to flood zones. C. The underwriter only evaluates the condition of the home's foundation. D. The underwriter ignores location factors and focuses solely on the applicant's credit score. Answer: B. The underwriter considers the location and elevation of the property relative to flood zones. Explanation: In assessing risk for properties in flood-prone areas, underwriters evaluate the location of the property relative to flood zones and its elevation to determine the likelihood of flood damage. Option is important but secondary to evaluating location-specific flood risks. Option C is not sufficient alone as flood risks depend on multiple factors, including location and elevation. Option D is incorrect because the location of the property in a flood zone plays a crucial role in the risk assessment. Question 13. Topic: Homeowners insurance. Which of the following is most likely to lead an underwriter to classify a homeowner as a high-risk applicant? A. The home is located in a neighborhood with a low crime rate. B. The applicant has a history of frequent home insurance claims. C. The applicant has no prior homeownership experience. D. The property is situated in a low traffic area with minimal access to emergency services. Answer: B. The applicant has a history of frequent home insurance claims. Explanation: a history of frequent claims suggests a higher likelihood of future claims, indicating greater risk for the insurer. Option is not a risk factor. In fact, a low crime neighborhood generally reduces risk. Option C is not necessarily a high risk factor, although it may be a consideration in certain cases. Option D is a concern, but not as significant as the applicant's claims history. Question 14. Topic: Regulatory environment. Which of the following is a key requirement for an insurer operating in New York to maintain compliance with state regulations? A. Insurers must provide coverage for all potential natural disasters. B. Insurers must submit annual reports to the New York Department of Financial Services (NIFS). C. Insurers must only offer coverage for high-risk individuals. D. Insurers are not required to comply with state insurance regulations if they are based out of state. Answer: B. Insurers must submit annual reports to the New York Department of Financial Services (NIFS). Explanation: under New York law, insurers must comply with state regulations, including submitting annual reports to the NITFE, which helps ensure transparency and regulatory oversight. Option is incorrect, as insurers are not required to provide coverage for all natural disasters unless specifically mandated. Option C is incorrect because insurers are free to offer coverage to individuals of all risk levels, although high-risk applicants may face higher premiums. Option D is false, as all insurers operating in New York must comply with state regulations regardless of their location. Question 15. Topic: Risk selection and classification. Which of the following factors is not considered when selecting risks for auto insurance underwriting? A. The applicant's driving record. B. The applicant's credit score. C. The applicant's age. D. The applicant's marital status. Answer: D. The applicant's marital status. Explanation: marital status is generally not a direct factor in auto insurance risk selection, although it can influence premiums in certain cases. The primary factors in auto insurance underwriting include the applicant's driving record, option A, credit score, option B, and age, option C, all of which directly affect the likelihood of claims. Question 16. Topic: Underwriting for high net worth individuals. Which of the following is most likely to influence an underwriter's decision when insuring high-value properties for high net worth individuals? HS. A. The applicant's job title and employment history. B. The historical value of the property's contents, including artwork and collectibles. C. The applicant's geographic location and city of residence. D. The applicant's car insurance claims history. Answer: B. The historical value of the property's contents, including artwork and collectibles. Explanation: HNWs often own valuable properties with high-value contents such as artwork, antiques, and collectibles. Underwriters must assess these factors to determine the appropriate level of coverage. Option A, while relevant for other aspects of underwriting, does not directly influence high-value property insurance. Option C is consideration but not as critical as the contents of the property. Option D is related to auto insurance, not property insurance. Question 17. Topic: Life insurance underwriting. Which of the following would most likely increase the premium for a life insurance policy during underwriting? A. The applicant is a non-smoker with a family history of longevity. B. The applicant has a history of a medical condition that is well managed with medication. C. The applicant is in their 20s and engages in regular physical exercise. D. The applicant has no history of substance abuse and works in an office environment. Answer: B. The applicant has a history of a medical condition that is well managed with medication. Explanation: a history of a medical condition, even if well managed, increases the risk to the insurer and typically results in a higher premium. Option A would generally result in a low premium, as a family history of longevity and being a non-smoker are favorable factors. Option C would likely low premiums due to a healthy lifestyle. Option D is favorable and would not likely increase premiums. Question 18. Topic: Property and casualty insurance underwriting. Which of the following actions would most likely reduce the risk associated with underwriting a homeowner's insurance policy? A. The home is located in a flood zone. B. The home has a security system and is regularly maintained. C. The applicant has a history of multiple property damage claims. D. The home has a wooden roof and is located in a high wind area. Answer: B. The home has a security system and is regularly maintained. Explanation: a security system and regular maintenance reduce the likelihood of claims related to theft, fire, or other hazards, thus reducing risk. Option A increases risk due to the flood zone location, and option C increases risk due to the applicant's claims history. Option D increases risk due to the high wind area and the home's wooden roof. Question 19. Topic: Underwriting process. In the context of underwriting, what is the purpose of risk classification? A. To determine the specific coverage options an applicant will receive. B. To categorize applicants based on their likelihood of filing a claim. C. To assess the financial stability of the insurance company. D. To evaluate the applicant's eligibility for a particular type of insurance. Answer: B. To categorize applicants based on their likelihood of filing a claim. Explanation: risk classification is the process by which underwriters categorize applicants into different groups based on the likelihood of them filing a claim. This helps the insurer to set appropriate premiums and manage risk. Option is a result of risk classification, but not its primary purpose. Option C refers to the insurer's financial stability, not the classification of risks. Option D is related but broader than the specific purpose of classification. Question 20. Topic: Reinsurance principles and practices. How does reinsurance benefit primary insurers in the underwriting process? A. By completely eliminating underwriting risks. B. By reducing the overall cost of insurance policies. C. By allowing primary insurers to transfer a portion of their risks to other companies. D. By increasing the premiums charged to policyholders. Answer: C. By allowing primary insurers to transfer a portion of their risks to other companies. Explanation: reinsurance allows primary insurers to transfer a portion of their risks to other insurers, reinsurers, helping to spread the risk and stabilize financial performance. Option A is incorrect because reinsurance does not eliminate risk, it only spreads it. Option B is not the main goal of reinsurance. Option D is unrelated to the concept of reinsurance. Question 21. Topic: Catastrophic risk underwriting. Which of the following is a key consideration when underwriting policies for catastrophic events, such as earthquakes or floods? A. The applicant's previous claims history. B. The local geological or environmental risks associated with the event. C. The applicant's occupation and income level. D. The availability of health insurance for the applicant. Answer: B. The local geological or environmental risks associated with the event. Explanation: catastrophic risk underwriting focuses heavily on the environmental factors that increase the likelihood of an event such as a flood or earthquake occurring in a particular area. Option A may influence risk but is secondary to environmental factors. Option C is not as relevant as the environmental risks. Option D pertains to health coverage, not catastrophic risk. Question 22. Topic: Ethical and legal responsibilities of underwriters. An underwriter discovers that an applicant has made a material misrepresentation on their insurance application. What is the underwriter's most ethical course of action? A. Approve the application anyway to meet company sales targets. B. Ignore the misrepresentation if the applicant seems trustworthy. C. Report the misrepresentation to the relevant authorities and decline the application. D. Ask the applicant to revise their application without reporting the issue. Answer: C. Report the misrepresentation to the relevant authorities and decline the application. Explanation: underwriters have an ethical responsibility to maintain the integrity of the underwriting process. A material misrepresentation should be reported to relevant authorities and lead to the denial of coverage. Option A is unethical as it compromises the accuracy of the underwriting process. Option B violates ethical standards, and Option D would constitute a failure to uphold the law. Question 23. Topic: Use of data analytics in underwriting. How does the use of data analytics improve the underwriting process? A. By automating all underwriting decisions, reducing the need for human input. B. by providing underwriters with more accurate, data-driven insights into risk factors. C. By eliminating the need for underwriters to consider historical claims data. D. By limiting underwriting decisions to simple binary choices, approve or deny. Answer: B. By providing underwriters with more accurate, data-driven insights into risk factors. Explanation: data analytics improves underwriting by enabling underwriters to make more informed decisions based on detailed, real-time data. Option as incorrect as human judgment is still essential in underwriting. Option C is incorrect because historical claims data is still a key factor in risk assessment. Option D oversimplifies the process and does not reflect the complexity of modern underwriting. Question 24. Topic: occupational and hazard risks. An underwriter is assessing the risk associated with an applicant who works as a firefighter. Which of the following should the underwriter consider when determining the applicant's risk classification? A. The applicant's driving record. B. The applicant's history of exposure to hazardous materials. C. The applicant's home ownership status. D. The applicant's education level and work history. Answer: B. The applicant's history of exposure to hazardous materials. Explanation: firefighters are often exposed to hazardous materials, which significantly increases their risk profile for certain types of insurance. This factor should be carefully evaluated during underwriting. While option A, the applicant's driving record, might also be important in auto insurance underwriting, it is not as critical in this context. Option C is less relevant as home ownership does not directly impact the risk associated with hazardous material exposure. Option D is not a key factor in assessing occupational risk for a firefighter. Question 25. Topic: underwriting guidelines and company policies. Which of the following best describes an insurer's underwriting guideline? A. Detailed legal contract specifying the terms of an insurance policy. B. Set of rules designed to determine which risks the insurer will accept. C. Method for calculating insurance premiums based on policyholder demographics. D. Requirement to offer coverage to all applicants regardless of risk. Answer: B. A set of rules designed to determine which risks the insurer will accept. Explanation: underwriting guidelines are a set of internal rules used by insurers to evaluate and classify risks in order to determine which applicants will be accepted for coverage. Option A refers to a policy contract, not underwriting guidelines. Option C is related to premium calculation, not the decision-making process regarding risk acceptance. Option D is incorrect because insurers are not required to offer coverage to all applicants, especially those deemed too risky. Question 26. Topic: insurance premiums. Which of the following factors is least likely to affect the premium for a homeowner's insurance policy? A. The type of roofing material used on the home. B. The age of the home and its electrical system. C. The homeowner's marital status. D. The presence of safety features such as fire alarms and security systems. Answer: C. The homeowner's marital status. Explanation: the marital status of a homeowner is generally not a determining factor in setting homeowners' insurance premiums. Factors like the roofing material, option A, age of the home and electrical system, option B, and safety features, option D, directly impact the risk of loss and thus the premium. Marital status is rarely a relevant risk factor for home insurance. Question 27. Topic: claims history and risk assessment. An underwriter is reviewing an applicant's claims history and they notice multiple claims for water damage. How might this affect the underwriting decision? A. The application will automatically be denied due to water damage claims. B. The underwriter may assess the cause of the water damage and determine whether it was preventable. C. The underwriter will offer the applicant low premium because of their history of claims. D. The claims history will not affect the underwriting decision as long as the applicant has paid premiums on time. Answer: B. The underwriter may assess the cause of the water damage and determine whether it was preventable. Explanation: underwriters evaluate the circumstances surrounding claims, including whether they were preventable or indicative of a pattern of risk. If the water damage was due to factors beyond the applicant's control, e.g. natural disasters, it may not significantly affect underwriting. However, if the damage was preventable, e.g. poor maintenance, the insurer may adjust the decision or premium accordingly. Option is an extreme response that would not typically occur without further investigation. Option C is incorrect because multiple claims often increase the premium, not lower it. Option D is also incorrect as claims history is a key factor in determining risk. Question 28. Topic: Underwriting for specialty insurance products. Which of the following best describes an underwriting approach for a specialized insurance product, such as cyber liability insurance? A. The underwriter relies solely on general information about the applicant's business. B. The underwriter evaluates specific risks associated with the applicant's digital infrastructure and security practices. C. The underwriter will offer standard coverage, as cyber risks are universal across all businesses. D. The underwriter will primarily base decisions on the applicant's financial standing. Answer: B. The underwriter evaluates specific risks associated with the applicant's digital infrastructure and security practices. Explanation: Specialized insurance products like cyber liability insurance require an in-depth evaluation of the applicant's unique risks, including their digital infrastructure, cybersecurity measures, and vulnerability to cyber threats. Option is insufficient as it does not consider the specialized risks inherent in cyber liability. Option C is inaccurate because cyber risks vary greatly by business type and digital practices. Option D focuses on financial standing, which is a consideration but not the primary focus for cyber liability underwriting. Question 29. Topic: Underwriting for auto insurance. An applicant for auto insurance has a history of several minor accidents over the past 2 years. How might this impact their underwriting decision? A. The applicant may be classified as high risk, leading to a higher premium or potential denial of coverage. B. The applicant will automatically be approved for the lowest premium available. C. The applicant's history of accidents will have no impact on the underwriting decision as long as they have clean driving record. D. The applicant will be approved for coverage, but only for limited term policy. Answer A. The applicant may be classified as high risk, leading to a higher premium or potential denial of coverage. Explanation: A history of accidents typically signals higher risk to the insurer, which could result in higher premiums or a possible denial of coverage. Insurers generally consider the number and severity of accidents when determining risk. Option B is unlikely, as a history of accidents usually leads to higher premiums. Option C overlooks the impact of the applicant's accident history on risk assessment. Option D might apply in some cases, but the primary concern is usually the risk classification, not the term length. Question 30. Topic: Insurance fraud and risk management. Which of the following would be a red flag for potential insurance fraud during underwriting? A. The applicant is seeking a policy for a recently purchased property with no prior claims history. B. The applicant has a high credit score and a long history of home ownership. C. The applicant has previously been denied insurance by another provider and is applying for high coverage limits. D. The applicant has no previous insurance history but is requesting a policy for a high-value property. Answer C. The applicant has previously been denied insurance by another provider and is applying for high coverage limits. Explanation: A history of being denied insurance by another provider, particularly if the applicant is seeking unusually high coverage, can indicate potential fraud. Insurers are cautious about applicants with a history of denial, as it may signal fraudulent behavior or risk that other providers have identified. Option is not necessarily a fraud indicator. Newly purchased properties can be insured. Option B is favorable and does not suggest fraud. Option D is concerning but not necessarily indicative of fraud. Underwriters would need to assess the specific circumstances